As people are coming in to the webinar, welcome. And I'd just like to briefly start that. Let's make this as interactive as possible, please.
Yes, please attendees, feel free to post questions on the chat and make the most of this time with Mikko Suonenlahti.
Agree with me.
Mikko.
Yeah. Agree with me, disagree with me. Let's get the dialogue and the discussion going.
Excellent. Let's get started. It's 4:02. Welcome everybody to this new webinar of Invest Horizon that is focused on go-to-market strategy. Invest Horizon, as you all know, is a project financed by the European Commission in association with Eureka. The lead partner of this project is Tectur, and it has as partners BP France from France, Meta from Italy, Bibicon from Germany, Jura from Germany as well, EBN based in Brussels, Belgium, and IESE from Spain. Invest Horizon was launched in June 2019, and it provides support to selected deep tech companies to boost their investment readiness and their investors' relations. 500 companies have participated in 4 to 6 months acceleration program. Well, as mentioned at the beginning, today's webinar is about fine-tuning your go-to-market strategy. And for this webinar, we have Mikko Suonenlahti, Director of Venture Capital Backed Startups. And Mikko is the board member of venture capital backed tech business in Amsterdam, Helsinki and London. He's the chairperson, director and board member of 2 FSA regulated venture capitals, Icebreaker in Finland and SmartCap in Estonia. Thank you very much, Mikko, for being with us today. And let's hope the audience will be very active and open to agree or to disagree with you and post questions on the chat. The floor is yours, Mikko.
That's great. Thank you, Ruben. And can you switch to the title page, please?
Yeah. Can you see my screen?
Not yet.
Let's see.
I did see it earlier.
No.
There we go. Excellent. Thank you. So good afternoon, everybody. A couple of things about how I approach go-to-market. And do notice that it's 2 words. It's go-to-market and strategy. And what I usually do is I coach investor presentations and financial plans as a part of an investor presentation. But go-to-market is the most crucial part of an investor presentation, which is why today, during the next hour, I will focus on go-to-market, but also on strategy. One of my objectives for the next hour is that I would like all of you to walk away from this webinar with very concrete ideas on how you will improve your strategy and your go-to-market. Next slide, please. And you can open the slide all the way if you click on it. Once more, that's it. Thank you. Okay, so I've been working with technology innovators and founders since 1983, almost 40 years. And I've had 4 of my own pre-revenue investments been acquired for more than 2 billion euros, which includes 2 Nasdaq US IPOs. And over the decades, I've served on the boards of more than 100 venture capital-backed companies in the US and in Europe. And I've looked at 5,000 presentations. So it's based on my own background that I pulled together the investor presentation framework, of which we're going to focus on go-to-market. And there's a couple of pictures about me and my private time and private life. I do take some calculated risk during my time off too. Next slide, please. As you want to get to a meeting with a VC, they want to see your presentation in advance, which is why I would encourage you to have a presentation which communicates to the outside reader, because based on that presentation, they will take a decision whether they meet with you for an hour or they don't. So on a high level, your whole presentation needs to be crisp, clear, and concise, because what you see in this slide is what a VC's email inbox looks like. They will always have existing portfolio companies that they're working with, and there is always a company which is in a problematic situation, and most of the VC's time goes into troubleshooting and existing investment. But at the same time, the VC has to do new investments, but they easily get 5, 10, 20 investor presentations every day, and they need to make up their minds which one of those 10 or 20 will they meet with the following week. Next slide, please. And let's open the whole slide and the bullet points. Thank you. So if I think of the 8 boards that I serve on right now, and also my previous 100 boards, I've noticed that most of my time in board meetings and in between board meetings goes to a continuous go-to-market discussion. It's never ready. It evolves every quarter. Even with my bigger companies that have grown from 20 employees to 600 right now, who are in a pre-IPO readiness mode, it's a continuous discussion on go-to-market. And with my big company, we're doing the equity story for public investors, and we're still fine-tuning go-to-market in that situation. There's an interesting statistic that 90% of startups burn out during the first year. And my thinking is that one of the key reasons why that happens is because of go-to-market. Not necessarily because the plan was not there, but go-to-market was not executed properly. Having said that, I would like all of you to walk away from this 1-hour webinar. You need a strategy, and separate to a strategy, you need a go-to-market plan. And I'll be covering a little bit of strategy, but more on go-to-market as we move on with the slides. The other observation that I've made regarding execution of go-to-market is that most, if not all, early stage companies that I've looked at or invested in or been on the board of, they underinvest in what I call lead generation and sales. And we'll be speaking a little bit more about both lead generation and sales in the next few slides, but this is my high level observation. And interestingly enough, I've almost stopped using the term marketing budget. And now most of my companies have what I call lead generation budgets, because they are very focused in generating leads for the sales team to work on. I guess the last high-level comment that I have is that many of you will think that the product and the service that you've developed, it pretty much sells itself, but it doesn't. And it's not enough that you have a high level thinking about technology, because there's a lot more that needs so that you can execute sales. So I'm going to hold my breath now for a while and would welcome any questions or comments from the audience, please. Anyone, do feel free to take the opportunity. If not, the conclusion of all of these bullet points is that they support the revenue line in your financial plan, revenue line of your financial plan. And we'll take a look at a financial plan later on as well. Next slide, please. So this is what a 10-point investor presentation framework looks like. This is the big picture, and I've built interrelationships between the different parts. And the 10-point investor presentation framework, it's a pretty obvious one that all of you should by now be fully comprehensive with. You'll have your title page, which needs to be interesting. I recommend overview slides, which is a mini story, bits and pieces about the management team and why you're unique. And then one of the cores is the customer problem, your value proposition, the customer ROI. Then there's go-to-market, market analysis, market segmentation. Yes, of course, there will be a lot about your product strengths or your service strengths. Then there's a technology bit, the technology roadmap, competitor analysis, and financial plan. But the interesting thing is that all of these separate elements of the presentation, investor presentation, they tie into the go-to-market one way or another. So with that, let's move on. Next slide. How many of you participants, how many of you have a strategy, a formulated strategy? I can see that there are 39 attendants. Is there anyone out there that has a formulated strategy on a board level? Or is there anyone out there that has communicated what your strategy is to all of your employees? Please, any questions, comments regarding strategy? I would like to provoke you a little bit more. And if you don't have a strategy in place, I would highly recommend that together with your board and the management team, you prepare and formulate a one-page strategy. And after you've iterated that a couple of times, communicate the strategy with all of your employees and make sure that they understand your strategy. The one-page strategy paper, it should be unique to you, very specific to your company, and it should be very easy to understand. So that's the first piece of homework that I would recommend that all of you that don't yet have a communicated strategy in place to think about doing that, because it does tie into go-to-market. So what is go-to-market? There are many, many, many definitions of go-to-market. My definition is the following. When Ruben asked me to speak about go-to-market, I immediately started thinking about how do you get your product or service to the market? How do you sell? How do you distribute? On a high level, there are many, many, many ways of getting your product to market. There are companies that offer free products, a freemium version of something, and then you upgrade and you pay a little bit more to get a standard version, and then you pay even more to get a fully blown enterprise version. There are self-service business models where you drive your customers to your website, and then there's a button which says buy it now, and they're able to buy and download the product right then and there. Then there's something called inside sales, which has to do with how do you drive through social media, through LinkedIn, through Google AdWords, through Facebook. How do you drive people to go to your website, and how do you then convert them from your website into what I call a business development phase, and then how do those leads then go to your salespeople to close sales? Then there's direct sales. And many of you have to start with direct sales in order to get your first pilots, get your first paying customers. And it's quite often the CEO founder that has to do the first few sales. And in my mind, if you are at a pre-revenue stage, the high-level revenue number is not what is important. What is important is getting your first pilots, even if they are unpaid pilots, because there's a couple of things happening. If they validate to you and your new investors and your new paying customers that there's a problem, you have a value proposition, there's an ROI for the customer, and that they're a happy customer, what that tells me is that the value of your company has immediately dramatically increased. And it's quite often the founder or the management team or the founding team that personally have to do the first few deals through direct sales. Then there's a channel. Some companies build national sales channels, others build global distribution channels, and that is a very relevant way of going to market is through a channel. In my own little head and thinking, you need to succeed first in direct sales before the channel sees that there really is demand for your product and for the channel to pick up a distribution agreement with you. And then the very last go-to-market model that I can think of is what I call a white label sales model, or it's sometimes called an OEM business model. And basically what it is that you have a big, perhaps a global brand wanting to sell your product, but they will not sell it with your name, but they will rather include it as a module with their own name as a part of their larger portfolio that they're selling to their own customers. That could be a very interesting way of moving forward in global sales, and such a partnership over time may, interestingly enough, also lead into an acquisition of your company. So this is the second bit, the second homework I would like all of you to think about, that if you don't have a written and well thought out go-to-market, and with go-to-market, I mean, how do you get your product or service to the marketplace? If you've not thought it through, that's the second piece of homework I would encourage that all of you do who don't yet have a go-to-market plan in place. Some of my favorites when I think of go-to-market, and if I did due diligence, if I did business due diligence on a new investment opportunity, for example, for Icebreaker, which is where I'm the chair and which is a new €100 million pre-seed stage fund for Finland, Sweden, and Estonia, one of my favorite questions as a part of go-to-market to you would be, please tell me about your lead generation plan. How do you find new customers? I'm highly interested in that discussion. And I'm highly interested in seeing, what does your marketing pipeline look like? How many marketing qualified leads do you have? And I'll show you what a marketing qualified pipeline looks like a couple of slides from now. And I'm highly interested in hearing your thoughts on, do you do inbound lead generation, or do you do outbound lead generation, or perhaps do you do both in how you generate new prospects and suspects for your company so that you can scale next year or the year after? And then as marketing leads convert and as your sales cycle continues, at some point you will have salespeople speaking about legal contracts and trials. Then there's what I call a sales pipeline, which is later in the sales cycle. You're getting closer to closing a deal. there again, I'm highly interested in seeing what does your sales pipeline look like today. So let me pull together lead generation and sales plan, the last two bullet points on the slide. If your financial plan tells me that you will do 1 million in revenue next year, my immediate question to you would be, fine, I take that at face value, but then show me your sales pipeline, show me your marketing pipeline. Why? Because I would expect to see 3 to 5 to 10 million of stuff, suspects and prospects in your marketing pipeline and your sales pipeline, so that I would believe and you would convince me that you would do 1 million of sales next year. So with that, I'm going to hold my breath again, and I'd be very pleased to take any questions or comments regarding strategy or high-level go-to-market plan, or anything at all about how to sell and what the different sales models are, or any questions or comments at all regarding marketing pipelines, or anything at all regarding sales pipelines. So please take the opportunity for questions. Over to you. Who wants to take the microphone?
We have a question from Leonardo Nomdeleu, which says, what could be a good percentage to invest in sales and lead generation in the early stages?
Right. So my approach is that I think you can start selling your product already before you have a minimum viable product. Because what you're already then doing is you're building a relationship. And then when you have the minimum viable product ready, then hopefully you're able to convert that early relationship into a pilot customer, irrespective of whether it's a paying pilot or an unpaying pilot. It's important that you get a pilot sooner rather than later, because the value of your company will increase at that point.
Mm-hmm.
More questions, please.
Tuli Honwane asks if lead generation, but is the lead generation budget the same as the marketing budget? If not, how it's different?
That's a great question again. And most companies would use the term marketing budget, and I'd be okay with that. The reason that I emphasize with my technology companies that it's a lead generation budget and not a marketing budget is the following. During the last 5-6 years alone, digital marketing has developed a lot. And what that means is that the traditional way of doing marketing in technology companies, it has totally changed. So the marketing directors that are in their, let's say, late 30s, 40s, 50s, or even 60s, they don't have the slightest idea of how to do marketing with web pages or LinkedIn or Google AdWords or Facebook or the tens and tens of digital marketing tools out there. And the traditional marketing budget was the following, that let's assume you had €100,000 marketing budget. The traditional way to think about marketing was that everybody knew that half of the marketing budget would be misspent, but nobody knew which half. It could be metro advertising, it could be billboard advertising, it could be radio advertising. And you would get some leads, but you always had that queasy feeling that you really didn't hit your end users. But with digital marketing, you can do that. This is why I emphasize the word lead generation budget over marketing budget. And this is why the lead generation plan should be very focused in finding customers. One of my favorites, irrespective of whether you're B2B or B2C or your software or your medical device, my favorite is LinkedIn. one way or another, LinkedIn, LinkedIn, LinkedIn. And combine that with Google AdWords, with Facebook, with email campaigns, with webinars. So I guess that's a subtle hint and an experience from my companies on how they do lead generation. Now, the interesting thing is that if I look at the 8 companies where I'm on the board right now, there is no magic bullet, there's no silver bullet on how to do lead generation, because it's so different from all of my companies. With one of my companies, surprisingly, they get their best leads from SMS messaging from mobile phones. They send simple questions to very targeted phone numbers, and you're able to answer 1, I'm interested in more information, or 0, or 2, don't bother me again. So for one of my companies, that works. For one of my companies, they're good on Google AdWords. With a third one, no Google AdWords success at all. So you need a modern lead generation person in your team, someone that understands what digital marketing is all about. I took some time in answering that question. It was a great question, and it just underlines how different modern digital marketing today is compared to only 5 years ago. More questions, please.
There's a question from Francesco Giartosio. Francesco, would you like to open your microphone and ask your question to Mikko?
Okay, yeah, I'm not very sure of the difference between between a strategy and go-to-market. Isn't it the same thing? I mean, isn't it the strategy to go to the market?
Right. That's a great question, and that's a good question, and I'm glad you asked that. So strategy. So if you think of the definition of the word strategy, for me, in its simplicity, your strategy answers the question, what business are we in? And go to market is, how do you get your product or your service to the market? How do you sell and support? In my mind, you need both. But I would say that 90% of the discussion should be on the go to market. But it's just a subtle hint from me that think about the strategy bit as well. And involve your board, and especially your independent directors on your board and your chairman of the board. I'm sorry, I should have said chairperson of the board, in thinking about strategy just a little bit. And what all of my boards do is we revisit go to market and we revisit strategy every 3 months, every quarter. It's on the agenda of the board meeting. Is there a need to discuss strategy, or is there a need to discuss go to market? And should we do changes or not? Good. Let's go deeper into go to market. And next slide, please. Unless there were more questions, I'm happy to take those, of course. No more questions at this point. Okay, so let's go deeper into go to market. And there are 4 points. And this again is just my own thinking on what I think are the key parts of go to market and the things that you need to think of. Many of you would approach me and tell me, look, Mikko, I have product market fit. Please invest €1 million. But before I agree with you that you have product market fit, I need to understand, what is the big problem that you're solving with your customer? And I want to understand that the problem is a burning problem and no one else is able to solve it except you. So my starting point with all of my interactions with new companies, tell me about the problem and build the story bottoms up. I love pitches that start by describing very concrete customer problems. And then the second point in product market fit. What is your value proposition to the specific problem? What is the value that you bring to the problem? And then the third bit, which I rarely, if ever, see, but I recommend you think about, at least on a high level. If your customer pays you 100,000 euros a year or a month, what is the customer return on investment? What is the customer return on investment for you to solve that problem with 100,000 euros? Is it 12 months? Or does the customer once the customer starts using your product and service, do they get the return on investment for the 100,000 in 6 months or 6 weeks or 6 days or immediately? And I don't mean to do a PhD thesis on the topic of customer ROI. I would encourage all of you to speak with your pilot customers and your existing customers. Look, Mr. or Ms. Customer, you're spending 10,000 with me every month. Tell me about your problem and tell me about our value proposition. And by the way, speak to me about the return on investment that you're getting for the invoice that I send you every month or every year. I started my career in '83 by selling enterprise software from a startup. And when I was selling enterprise software, I learned and I knew that for a company to be able to buy a big piece of software, internally they had to do an ROI analysis and an ROI calculation so that they could get the money from the budget. And if you're able to get the ROI from your customer, I think it's something for your website and your website messaging, because fundamentally, I believe that all of you 40 on this call, your companies are in the ROI business. So I just want to introduce that thought, that philosophical thought about ROI. Good. Moving on to market segmentation. Here again, I mostly see market analysis that, hey, I have a 10 billion market, and if I only get 1% of that market, I'll be a big company. And by the way, my market grows 5% a year. That's not enough for me. What I would like you to do, it comes back to my thinking about building these investor presentations bottoms up. I would encourage you to first think about your own country. If you're from Belgium or Portugal or anywhere else, what is your market in that one specific country? How many customers do you think you have in your own country? And how much do you think they would pay you in a year? That's one way of building a market size in your own country. And then when you do that piece of thinking, you're able to then extrapolate and start thinking about England or the UK or the US or China. And all of those markets will be very different, but it'll give you a framework of how to think about market size for your company and specifically for your company and building the market bottoms up. Good. Competition. And there's a competitor slide later on in the presentation. You will need to do competitor analysis, not only for the new investor, but as a part of your own go-to-market strategy. You need to analyze your competitors' go-to-market and think about how are they doing it, and could you do something in your own go-to-market better or cheaper or faster or smarter? There's a lot to be learned about your competition. And then the fourth point, which I think we've covered in the previous slide, how do you sell and support your product or service? So these are, for me, the four critical parts of go-to-market. So with that, again, I'm more than happy to open it for discussions and comments regarding the problem, value proposition, ROI, or market segmentation, or competition, or how do you sell and support your own product or service. Please Who wants to take the microphone first? Anyone? You all have your go-to-market up and running, ready for the investor.
Vangelis Angelakos has a question. Vangelis, would you like to share it with the audience?
Please.
Well, I'll make the question. Can you recommend some tactics in efficiently experimenting with channels to find out what will work?
Right. So I guess the high level answer is that you're all familiar when you develop software that there's something called A/B testing. So I think it's A/B testing of go-to-market. So you need to, it's trial and error. You need to continuously try and figure out what works for lead generation, what works for closing sales. And as I said earlier, it'll evolve over time. And at some point you may have to do major pivots in your go-to-market.
Thanks, Mikko.
Thank you.
Alexander van der Kleij, would you like to share with the audience and with Mikko your question?
Please.
Yes, can you hear me?
Yes, perfectly.
Yes, okay, perfect. Thank you very much for the opportunity. My question is regarding the go-to-market strategy versus your long-term strategy.
Yes.
We see that we have opportunities to accelerate the time to market in a niche market, which is not the same as where we would like to go in the future. So how do you balance that out, and how do you communicate that to investors?
I love the question. Thank you for raising that. So here's my personal thinking, and this is just me. I love niche markets, and I would like you to become a global market leader in your own niche. And then 2 years from now or 3 years from now, when you're able to say that, look, in this niche market, which by the way is a high growth market, I am global market leader. It's only after that that I would start to expand into other markets or other niches, if you will. So my experience of early stage companies is that I see these companies going after too many markets at the same time, and I continuously try to tell them, focus, 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 and find a niche and become a dominant player in a niche, and only then start thinking about expanding. So how to communicate that to an investor? The way I would communicate it is that, look, Mr. or Ms. Investor, I'm now raising €1 million, and with that million, I will focus on 1 or 2 niches, and during the next 18 months, I will become a dominant player in these market segments. And then, as I succeed, 12 months from now, I will start raising my next round of financing, which is not $1 million anymore, it's 5 million, or maybe even 10 million. And with the next round of financing, I will expand into other geographies or other markets or segments or niches. That's how I would think about it. Does that help?
Yes, that does help. The challenge is always that in some cases the niche market has very different requirements from your product than, let's say, the larger market. And
yes.
with your comment on focus, 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 it means that you are focusing on something different initially, which might require you to develop the product differently, which might not apply, which makes the time to the other market maybe longer, if you understand what I mean.
I do. I perfectly understand what you mean. But it's not just the product. It could also be your go-to-market. Your go-to-market could be very different for the niche, as opposed to what you call the bigger market or the longer-term market. And you will always have finite resources, so you need to make it clear to yourself that do you have enough skills and resources to go after a niche and an adjacent market at the same time, because you will be resource constrained and you will be skill constrained at the same time. So it's a unique balance that you need to find.
Okay, thank you.
Good. Then let's go through some other examples. Next slide, Ruben, please. So this is just a reiteration of what I've tried to emphasize: the problem, the value proposition, and the ROI. And with one of my companies many years ago, when I asked them about the ROI, they said, look, Mikko, we don't know what the ROI is, and we don't even think it can be calculated. And I was the lead investor for a 7 million euro Series A round. So what I did with two other investors that wanted to invest is we each called 10 customers, and they were all introduced by this company, and 20-minute calls with 4 questions. The first question is, what is the problem that this company solves? The second question was, what is the value proposition of this startup? The third question was, what is the return on investment for you? And the fourth question was, is there anything else you would like to tell me about this company? And when we pulled together 30 20-minute interviews, the synthesis of that actually became the core reason and reasons in my own investment proposal for my partners, why I wanted to invest in that company. It suddenly became so clear when we spoke with the customers. So I would encourage you to do that if you've not yet done it. 4 simple questions, 20-minute calls. It's easy to do. So before I move on to sales and marketing funnels, any questions about problem, value proposition, ROI? Because for me, it all starts with the individual customer problem. And for me, this is one of the cores of your investor presentation, and it ties into your go-to-market. And it'll tie into messaging in your website if you do this exercise. So please take the opportunity if you want to, problem, value proposition, ROI. Any questions or comments on that? Good. If not, for those of you that are not yet clear on these 3, this is the third piece of homework that I want you to think about. Speak with 1, 2, 3, 4, 5 of your customers and ask them these 4 questions, and then think about the answers. And how do those answers impact your investor presentation, and how do those answers impact your go-to-market and your own messaging? Good. If no questions, next slide. So this is what a combined marketing pipeline and a sales pipeline looks like for a pre-revenue company, a company with no revenues, when I help them raise 500,000 of seed capital. So how do you argue that you will do revenue next year if you're pre-revenue today? What I would do is I would think of all of your existing customer or prospect or suspect discussions that you've had, build them into a CRM or Excel, if nothing else. You could use a tool like Pipedrive or any other simplistic CRM, and take all of your leads and structure them. Which ones are prospects? And maybe they're companies you've not even spoken with. And then you may have contacted 10 or 20 companies regarding your service and product. Give them a value. And then you may have some offers out there. So by how much? And then you may be in final negotiations. And as I said, this slide alone was crucial in getting 500,000 investment for a pre-revenue stage company. They showed the pipeline and they said, look, Mr. and Ms. Investor, please invest 500,000 because I will use most of that money, not all, but I will use more than half of that money into converting the marketing and sales leads into real revenues next year. So what I want you to understand is the logic between the marketing pipeline and the sales pipeline, and how I draw a concrete line from the funnel to your financial plan and your next year's revenue. So it's a great way of supporting the revenue line in your financial plan. So at this point, happy to take any questions at all regarding marketing pipelines or sales pipelines and how they support revenue plans. Anyone? Everyone. So everyone here has at least an Excel pipeline or a Pipedrive pipeline, or do you have any pipelines at all? Question mark. If Ruben had given me the list of participants in advance, I would pick up a few names and I would ask you, what's the situation in your company?
Goran has confirmed that he has a tool for this. Goran, could you share it with the audience?
Please. Please take the microphone if you wanted to.
Goran. Now, yes.
Now, yeah, thank you. I don't think I could unmute myself. So we introduced Salesforce at the beginning of this year, and it's a great help, definitely.
Yes.
Lots of work, but it's worth it.
Yes. So good. So do continue. Do you have a question regarding that, or was that
no? Just comment that we have that, and I really recommend somebody to not use Excel.
Good.
That's my comments.
Good. So when I think of Salesforce and early stage companies, my immediate reaction is that it's a heavy tool for big companies and mid-sized companies. And so there are tens of CRM systems out there. Salesforce is one of the largest and most sophisticated, if you will. A pencil and a piece of paper is the most simple CRM out there, and then there's Excel, and then there's Pipedrive and other simplistic tools. And then some of you may be using ERP systems because you're in production and you're in manufacturing. And many ERP systems also have a CRM tool for sales and marketing. One of my observations has been that sales and marketing, they need a sales and marketing specified CRM, which is different from the CRM on an ERP system. Good. Any more questions or comments regarding marketing qualified leads or sales qualified leads or CRM systems?
Eric Alphonse has a question, I guess. Eric, you want to share it with Mikko?
Yes, thank you. Can you hear me?
Yes, perfectly.
Thank you very much for the opportunity. Yeah, what is the difference between prospects in your funnel and the serviceable addressable market? How do you? What is the right definition of prospects here?
Yes, it's a very good question. Once again, thank you for that. So before I go into the funnel, let's think about market segmentation. And quite often I see a market slide with three components. One of them is what is called a TAM, T-A-M, for total available market, globally or nationally. And then there's share of market. When you start segmenting the market, what is your unique part of the overall market? So these are words and abbreviations when you approach a market top down. So there's total available market, there's share of market. And I quite often see market slides that use these. But what I have here is a funnel. And if I start with a prospect, in this case, this company, they thought the salespeople and the marketing people, they thought that Fujitsu in Japan and Rolls-Royce in the UK would be ideal customers, but they had never contacted them. But they wanted to communicate to the investor that, look, I have prospects. I have 4.5 million worth of prospects, companies that I know exactly where to go to speak and sell if I had the money to invest in sales and marketing. And then they said that, look, we've contacted companies like ABMB in Switzerland, or Hewlett Packard in California, or Ernst & Young in Australia. And based on the companies that are in my CRM, which we have contacted and which we have already spoken with once or twice, we think there's 450,000 of business that we can get out of them next year if I had more funding and if I was able to invest more in sales and marketing. And then, by the way, we've done offers. We have real sales proposals out there for 250,000, including with SAP in Germany. And then they said, we're in final negotiations with IBM in Finland and Canon in Sweden for 125,000. And what they said is that, look, I'm looking for an investment, and this is a pre-revenue stage company. And they said, I need funding, and I'm looking for funding of 500,000. And my next year's revenue forecast is 250. And I think I can do that 250 because I'm already in final negotiations for half of that 125. And I've made offers for another 250, and I have contacts for 450,000. And out of that, which is almost 1 million, all I need to do is 250, and I will hit my revenue plan for next year. And then there's the 4.5 million of prospects, which I will start targeting, not for next year's sales, but for sales for the second year. So with this, I hope you're all clear on what a marketing pipeline is and what a sales pipeline is. Good. We have 6 minutes remaining. So let's move on to the next slide. And this is the competitor slide. And this is how I would recommend you build your competitor slide. And there's a couple of things happening here visually. You're showing that your company, it's all green because the line items are your key features and functions prioritized top down, starting from the most important one. And then you show that you have competitors like Microsoft and IBM and a couple of startups. But visually, they have red parts and they're nowhere close to you based on your own subjective competitor analysis. So what this slide does, it takes off the competitor discussion in your first meeting, but the investor will want to have a separate 1-hour discussion on this. But my point, how does this tie into go-to-market, is that once you've identified your main competitors, including the big guys and the small startups, think about how do they sell, and how do they do marketing, and how do they do lead generation, and how do they service their customers? Are there things that you could learn from your competitors' go-to-market that you want to apply or not apply? Maybe you could do something a lot better and smarter and faster and cheaper than what they're doing and come up with a much more efficient business model for your go-to-market. Good. Questions regarding competition? Anyone? If not, my last proper slide with 5 minutes remaining, 4 minutes remaining now. Most investor presentations that I get, they don't have a financial plan. They should. And in its simplicity, this is what a collapsed income statement looks like. It's a summary of a very complex Excel sheet where you have your head counts by month and you have your monthly income statements and balance sheets and cash flow analysis. But as a bare minimum, this is what you should have in your investor presentation, your revenue. And remember, we just established the link from the marketing pipeline and the sales pipeline to the revenue item. You have your cost of goods sold, your gross profit, your salaries, your OPEX, and your EBITDA. If you're a software company, the negative EBITDA for the next 3 years is very, very close to your funding need. Think about that. Most companies show me a financial plan where the EBITDA is positive, and I tell them that, look, your financial plan tells me you don't need any money. So this is how I through numbers, through an income statement, through a collapsed income statement, I come up with how much funding should be raised. And then on top of the funding that you're raising here, you need to have a reserve because your revenue will be behind schedule. And there may be unexpected expenses. So many of you would ask me, how much money should I raise? And my answer is, show me your 3-year financial plan. It's the negative EBITDA of those 3 years. And then some of you that have a product and an inventory, you may have some balance sheet investments. But for the software companies here, you don't have those. So this is how you come up with your investment need plus reserve. And I make the strong link from go-to-market to marketing pipelines, sales pipelines, and through those, you support the revenue plan. With 2 minutes remaining, any questions regarding the financial plan? And we can move to the last slide. And basically, I would like to summarize it by saying that you have to raise capital. The faster you grow, the more capital you will need. Dilution is your friend. And I would expect that many of you, if you want to become companies with hundreds of millions of euros of value, you need 2, 3, 4, 5, 6 funding rounds during the next year, 3 years, 5 years, in order to become valuable with hundreds of millions or even more than $1 billion. I've done it 4 times with my startups. There are many companies here today that can do it as well, but you just need to think through your go-to-market as a core thesis. So with that, let's be careful out there. Thank you for your participation. Thank you for your questions. They've been spot on, and I'm happy to hang around for a while and take more questions. Thank you.
Thanks a lot, Mikko. Thank you from Leonardo Nomdedeu. We have one question from Francesco Giartosio. When you mention LinkedIn, do you mean ads or direct messages or general posts or something else? Mikko, this question is for you.
Please, could you repeat the question?
When you mention LinkedIn, do you mean ads or direct messages or general posts or something else?
Right. So that's a good question once again. So if we would have done this as a half-day or full-day presentation, I would have all of your information in advance, including your investor presentations. The first thing I would do, or if I was an investor that you wanted to target, the first thing I would do when I hear of you, I would go to LinkedIn and I would check your LinkedIn profile. That's your business card to the world. So make sure your individual LinkedIn profiles are at a very high level. But then, if you've identified 10 companies where you want to generate revenue from, a good place to identify actual people is through LinkedIn as a tool. So many of my companies use LinkedIn as an everyday tool in trying to target individuals inside companies who possibly could be a buyer of your software or your service or your medical device. But LinkedIn is just one part of a mix, which includes Google AdWords, HubSpot, CRM, Facebook, and so on, so on, so on. There are tens of digital marketing tools out there that drive prospective customers into your website. Thank you.
Thanks, Mikko. Last question. You mentioned medical companies, medical devices. Julie Dalsgaard asks if any experiences or recommendations with building a go-to-market strategy for a medical device?
Yes. So that again is an excellent question. And for medical devices, there are many different ways of doing go-to-market. I was coaching, and I'm at the present coaching several life sciences medtech companies in another investment horizon program, and we're having that discussion with 10 companies as we speak on what is go-to-market for medical devices. And one of them, which is a pre-revenue stage company, they are already surprisingly speaking with Medtronics regarding European-wide distribution. And it's a white label agreement. So Medtronic would put their own label on it and start distributing. I was positively surprised that they were in those discussions, because quite often with medical devices, you have to sell or give out for free your first few devices, and only then are you able to start building distribution. And there are specialist companies that distribute medical devices. So there, it's a combination of direct sales and distribution, but, and this is why it's a great question, and also applies for software companies. The higher the price of the device, the more inclined I would be to use direct sales as opposed to distribution. And the lower the price, you cannot afford to send an expensive salesperson to knock on the doors of cold customers that you know nothing about. Which ties into pricing. And pricing is also a part of go-to-market. And I may have neglected not mentioning pricing, but you need to think about pricing. And many of you will price yourselves below Microsoft. But I would say you should price yourself above Microsoft, because you're so much better. And pricing is often neglected. It should not be. It should be thought through on what is the correct price. And I would again, here's one more homework for you. What would happen if you multiplied your price by 10? Or the other way around, what would happen if you divided your price by 10? It's called price elasticity. And it will have a huge impact on how you sell, depending on what your price is. Thank you.
Thanks a lot, Mikko. Thank you for your time. Thank you for all the attendees for participating in this webinar. I hope you find it useful and insightful. I think it has been great, with lots of insightful contributions from Mikko, and I guess this will happen the entrepreneurs and startups for the next steps within their projects. Thank you very much again. See you on the upcoming events of Invest Horizon. Have a nice day.
Thank you all. Take care.